Hey, welcome to the Freedom Real Estate Podcast with your boy Andrew Freed and my buddy Zack Gray. How you doing today, Zack?
Hey, I'm doing really good, man. We're just finishing up a strong week. We had 5 closings, a couple were refis, a couple purchases, and projects are going smooth. We dodged a couple kind of sticky situations, but ultimately excited to head into the weekend strong, and excited to sit here and go through this podcast with Andrew.
Yeah, I mean, you bring up some good points. I think one funny story that came across our desk this week was, I think you and I had a closing on a 16 unit, right?
Yep.
So we had a closing on the 16 unit and everything was good. We signed the papers, right? We're just sitting in our team meeting the next day. I get a call from the attorney. They're like, oh, we made a mistake on the HUD. You actually have to bring $250,000 more.
Yeah, that was, I got that phone call, and I'll tell you that the cortisol levels definitely went up.
Yeah.
I was at the gym in the midst of working out, and I just walked out immediately. I was like, we need to figure out what the heck's going on here.
Needless to say, we found the $250,000 in a couple hours, but it was not a fun situation. So let's get into the nitty gritty, right? So, I think today's topic that we really want to chat about, and we really want to educate the community on, is how to vet and to collaborate with partners to scale. Zack and I have utilized this tool to really expand our portfolio, and we kind of want to lay the knowledge back on you.
Yeah, so, what we're really looking at here is Andrew and I have, built a sizable portfolio, roughly around 400 units in Massachusetts, and in doing that, I think one of the most integral elements to our ability to scale our own portfolios has been, or our portfolio together has been, identifying strategic partners and identifying individuals that help complement our skill set. And so I think this all starts with, from inception, Andrew and I were solo operators, right? When I met Andrew, Andrew had, a handful of units, maybe 15 or so units. I had, 10 to 15 units, and we banded up together and ended up, partnering on our first deal together. And I think the question that everybody has in real estate is, when's the right time to partner? Should I partner? Who should I partner with? How do I identify partners? Like, there's a lot of kind of questions in regards to how to kind of make that shift. So I think today we're going to kind of dive into some of those topics and how we identify those people. So I want to start it off by kind of kicking it off with Andrew by asking the question of why do you feel like partners can make or break your ability to scale, and how do you identify the right fit?
Yeah, I mean, I think all of us have taken, group projects at school, right? And when we take group projects, a lot of times that goes to show you, when people do their role, things turn out great, right? When nobody takes ownership, when people don't take the responsibilities, when people don't sit in their strengths, it becomes like pulling teeth, right? And that's very much, very similar to real estate, right? Like, if somebody is not pulling the weight, if somebody in your team says they're going to do what they say they're going to do, come around a week later, their to-do list is not complete, it makes your job extremely challenging for you to stay in your lane and focus in your lane when other people are not carrying their weight.
Yeah, I couldn't agree more with you. And I think this kind of hits on, one of the things that has allowed for our partnership to be, just beneficial, mutually beneficial for one another is that, in our partnership, Andrew handles, one facet of the business, which is really kind of the back-end administrative component. And I handle really sort of like the more operationally intensive, kind of in the field, boots on ground component, project management status. And I think that, early on in our partnership, people laugh about how this whole situation kind of shook out and how Andrew and I really established roles and responsibilities. But it could be as simple as, one of the things that was huge for us is we actually sat down after having already gotten a property under contract together, and we sat down over dinner and we took a piece of blank paper each, and we wrote down all the things that we enjoy doing in real estate, and then we wrote down all the things that we do not enjoy doing in real estate. And in doing that, right, what we did is we each read off our strengths, or the areas that we liked, and all the things that we had solo that the other person did not, we identified as that's going to be your job. And if we had a joint strength, we just basically 50-50 them, right? And then all the components that we did not like, we went through the list and said, hey, if we don't like all these components, if we both had the same dislike, we identified, all right, the joint dislike is what we need to hunt for in regards to either employees or other partners. But in addition, I had some dislikes. Those, Andrew said, hey, I don't mind doing those. So he took those responsibilities. And Andrew had some dislikes that I was indifferent about. So then I took those ones. And I think that it can be as simple as that. And it just happened to work out where in this situation, we ended up in a situation where you liked a lot of the stuff that I hated, and I like a lot of the stuff that you hated, and here we are today.
Yeah, I mean, you bring up a lot of good points, and let's just think about scaling logistically. Like, if you're really trying to scale, how do you do that? You get outsized leverage, right? So the real way you scale, and Zack alluded to this, is you find business partners where you can sit in your genius, spend all the time where you're really good at, and everything that you're not good at, you can leverage to other people, right? And if you're sitting in your genius zone, I guarantee 1 + 1 will equal 10, right? And if you have 4 or 5 people doing that activity, your business is going to grow beyond your wildest dreams.
Yeah, I couldn't agree more. And I think that Andrew and I at this point are able to kind of scale our portfolio and make a living off of identifying areas where we were weak and really owning that weakness, right? We identified areas that we didn't like. For example, right, Andrew and I are not skilled deal finders, and we don't really like committing time to deal finding. And so, in this process, one of the things that's been so impactful and I'm sure Andrew can kind of add on to this as well, is that we sat down over the years and we've talked about how do we create incentive structures that entice other people to bring us deals? How do we, and so one of the things that you might be able to add here is, what incentives do we offer for people who bring us deals? What sort of things do we think about when dealing with wholesalers or brokers or agents that they care about, that make it easier or that make them want to bring us more deals? And, maybe shed some light on that and how that's impacted our ability to work with those partners and continue to grow.
Yeah, I mean, this kind of leads into our next question regarding how do you vet partners, right? And you made a great, you alluded to a great tactic, which is incentives are aligned, right? Like, I'm not going to partner and you're not going to partner with somebody where our incentives are simply not aligned, right? So I don't know if you really want to elaborate on that, on kind of what you do to vet potential partners.
Yeah, so, one of the things that we look at in regards to vetting partners is, I think there's really 3 criteria that we focus on extensively. I think that is time, money, and expertise. And I think you have to understand which of those you harness and which of those you need, right? So, there might be situations where you have the expertise of operating deals and you have the pedigree that supports providing tutelage, advice, kind of mastery of the skill set, all right? And you might also have, because of that mastery, it's much easier for you to raise money. But at the same time, you lack the time to be able to handle a lot more deals. And so this is a situation where you need to be able to partner with people who want to be materially involved in the boots on ground component, or flip the script, right? You have time to operate the deal. You have, curiosity and kind of this problem solving, sort of personality, but at the same time, you might lack money, right? So I think the question is, which components do you do you encompass? And I think solving for the other parts of the equation. And I think this can be done through online networking. This can be done through going through local meetups. I think this can be done through meeting like-minded people who want to operate in the industry, with you as well. What are some of the things that you focus on in regards to vetting partners that you feel like have helped us in freedom management?
I mean, you bring up a lot of good points, and you talk about a formula, the variables that make up a good partnership, right? But the question is, what formula, what are you solving for with that formula, right? And I think the key there is making sure goals are aligned, right? So if we're buying, for example, if we're buying a buy and hold with somebody, right, we need to ensure that their goal is long-term wealth. Their goal is to hold this asset for the long term, and their goal isn't for a quick buck, right? To fix and flip this potential property that we plan on holding long term, right? So you bring up a lot of good points that, we need all the pieces of the puzzle to fit in place, but it also has to solve for the same puzzle.
Yeah, absolutely. And I think that, to that point of, identifying the kind of the lane of real estate that you intend to operate in, I think there's a multitude of lanes. I think there's buy and hold, there's fix and flip, there's short-term rental, there's medium-term rental, there's syndication style, there's outsourcing PM. There's a lot of questions that kind of have to get asked in regards to, do you want to be more hands-on? Do you want to be in control? Do you want to be more passive? And I think that can dictate, kind of fit and feel for a potential possibility of fostering a partnership, of working together. And I think that, a couple of the things that I hit on were both, time, money, expertise, and sort of my, prior narrative. I think this kind of hits on another point, which is not only do those intangibles matter, but I also think that kind of the deep-seated personality traits and the ability to kind of collaborate and work together and kind of work styles has an effect too. So what kind of, one of my questions too is not just real estate experience per se, or being kind of a key contributor, but how has personality and fit and that kind of component played a role in you identifying partners, and what sort of measures do you take in regards to identifying interpersonal characteristics?
Sure. I mean, I would say throughout business, I've always had trust issues. Trusting other people to control the money, trusting other people to get the job done, right? So what does that lead into? That really leads into the fact that, this person has to have a high level of integrity, right? Like if I ask you to pay this person, this cash for keys tenant, $10,000 cash, take it out of the bank account, I shouldn't have any question on whether that money will make it to the tenant's hand and that unit will be vacated, right? And if there's any question that is not going to take place, this is not the right partnership for me, right? So integrity and trust is absolutely one of the top qualities, the intangibles that I look for in a partner.
Yeah, you couldn't have said it better. I mean, I think that there's a lot of personality traits that we encompass in our organization that have kind of made their way into, at this point, Andrew and I identifying the sort of the key principles that have helped shape our organization, and we make those known to our staff and to our partners, right? And we have conversations about those components so that when we establish expectations from inception, right, there are going to be projects that get derailed. There are going to be projects that don't go to scope, that have scope creeps, or that get, that don't get executed in the timelines that we kind of set out to from inception. But I think that those are things that we can handle, right? We can handle going a little over scope and making less money. We can handle delays on projects if it's out of our hands. But I think the things that we can't handle are not being aligned in regards to our expectations of our partnership responsibilities. And, this kind of brings to light the next point, which is what if you had to pick just one characteristic that you you really focus on, or that you feel is a key contributor or key principle to our company, and that others should consider when they're identifying their key principles for kind of shaping and forming their partnerships, what are some of the other items that you look at that mutually that we take into consideration here when identifying partners?
Yeah, I mean, you bring up a lot of good points on whether these individuals match our corporate culture, like relentless execution, being humble, accountability. I mean, those are some key metrics that we look for. But in regards to your question of the number one trait we look for a partner, it's one trait, and it's like, do you do what you say you're gonna do, right? Because ultimately, you can achieve everything in this world if your word equals reality, right? If I tell you something and 100% of the time I do what I say I'm gonna do, my potential is absolutely limitless, right? And that's the same with partnerships, and that's the same with running our entire organization.
Well, and I think it's kind of interesting, and so I would say that I run my life off of that principle, not just my company, right? I think that this could go back to relationships, this could go back to friends, this could go back to family, and this could also shape your company. Is, do you do what you say you're going to do? And I think that it's not ironic that key principle is sort of the founding principle of our company. And but at the same time, right, if you're consistently doing what you say you're going to do, that plays a massive role in helping instill that trust that you were talking about. Mm-hmm. And it helps create that comfort level of allowing people to operate in their lane and to allow for them to kind of work in their strengths without micromanagement, because again, you trust them to get done what they say they're going to do, right?
Yeah, I mean, I totally agree with you. I mean, this is not only a business principle, this is a life principle, right? Like you have to really live this through and through all aspects of your life. And that's what we look for in our partners and our employees, right? And I feel like that's the reason why, we definitely stand out above our competition, is we execute on a relentless stage because everybody in our organization has that same drive and has that same goal.
Yeah, and I think that beautiful things happen when it is crystal clear as to what is expected of you when you show up to work and to perform your work, and everybody is operating in unison, with 250% intentionality and intensity in their lane because they know what's expected of them. And I think that is, that's kind of what Andrew was alluding to earlier when he said 1 + 1 = 10. And I just couldn't agree more.
Yeah, I mean, when it comes to an orchestra, it could sound like a beautiful symphony, or it could sound like a whole bunch of random noises, right? It's like, are you creating the symphony, or are you just creating a bunch of random noises? And, with these tools, this is how we really created the symphony to create freedom management.
So we're going to be talking about how to find a mentor in real estate to help you reach your goals.
Yep. So we're actually going to be talking about how do you identify a mentor, how do you get them to even give you time, because their time is ultimately extremely valuable, right? Where do you find these people? They can be anywhere. Like, where are they, right? And the big question is, how do you convert a mentor to partner? Because eventually your goal is to get at the same level as them, if not higher, right? So these are kind of the steps we will go over these are the steps we will go over in how to find a mentor in real estate today.
Absolutely. And, as we kind of dive into the first one here in regards to how to identify a mentor. So, one of the things that I will share that I don't know that I've ever technically said out loud. That is, when I started going to real estate meetups, I would actually seek a lot of advice from Andrew here. And so, at the time, I had very little knowledge, very little insight into the industry. I owned, a property and was one multifamily property and was looking to scale. But in attending the meetup, I put myself in a room full of people that had a lot more knowledge than me, with the intent of meeting people that could help guide me in the direction that I was looking to go. And in that process, I met Andrew, who had a lot more knowledge in the industry than I did. And so, I found comfort in asking a lot of questions to him throughout, the first probably 6 months to a year of attending those meetups. And, in a way, at the time, he actually did function like a mentor to me. And then, we ended up kind of collaborating and starting to work together. And that's obviously a story for another day. But I'm happy to kind of kick it over to Andrew and, him to share some of his insights in regards to how to identify a mentor.
Yeah, I mean, you're really jumping to the end where converting a mentor to partner, right? But ultimately, like, how do you identify a mentor? Like, you have to identify people doing what you want to do at a large scale, right? And that's exactly what Zack did. I mean, I didn't have a lot of units under my belt, but I had more units than him, and he sought guidance from me because I was doing what he wanted to do at a larger scale. And at that point in time, that was a larger scale to him, right? So that's the key there is, like, say, for example, if I want to buy a lot of multifamily in, say, for example, New Bedford, Massachusetts, I'm going to find the 5 top investors in that market and figure out a way to provide them endless value. Like, that's how you find a mentor in today's market. That's how you find a mentor in today's market. Anything you want to add on to that, Zack?
Yeah, I mean, so people who are crushing it, right? They have such a shortage of time. Mm-hmm. So if you can, trying to get them to give you even a few minutes of their time is extremely challenging because they're already at a shortage as it is. And I think that to that point, Andrew's kind of alluding to the fact that you have to find ways to bring them immense value, right? And there's many ways in which you can do that. It could be as simple as offering them lunch or coffee or things like that, just to give you half an hour of their time to ask them a couple questions. It could be as simple as taking care of some responsibilities at their house. It could be as simple as offering to sorry, I don't have anything else.
Yeah, I mean, I think Zack alludes to this. It all comes back to saving time. How can you save this person time? Because ultimately, why do people seek financial freedom? It's not because of money. What they ultimately want is freedom of time, right? So I think that's big when it comes to finding a mentor. But ultimately, you really just want to provide them endless value, right? Like, I'm trying to think. I'm losing my train of thought too.
I think it's just about putting yourself in the other person's shoes, understanding that they have such a shortage of time, and that there are probably many ways in which you could help them spend less time in their day-to-day and really create efficiencies in their life that allow for them to accomplish more. And when they see that you are the solution to helping them accomplish more, now you've become an ally rather than a burden. And I think that's really you need to shape that mindset shift for that accomplished individual, and then rather than them seeing you as somebody who's trying to suck out their time, they see you as somebody who's helping contribute to making their life more efficient, or helping them accomplish and achieve more success, in which they now want to help you, right?
Yeah, I mean, ultimately, Zack's alluding to saving time, right? But the other component of that, which is incredibly important for getting a mentor as well as keeping a mentor, is not wasting their time, right? So if I, as a mentor, give somebody advice for a question that they ask, right, and then I meet them a week or two later, they don't follow through with that advice, I literally feel like I wasted time, which honestly is my most valuable resource, right? So it's not only about saving the time, it's also about making their time valuable by taking action on their guidance.
Absolutely. And, this comes back to, when attending networking events and asking whether you're the person who's asking for advice, or whether you are the person who is being sought out for advice, I think the intent remains the same. The idea is if you are the person asking for advice, the expectation is that you're taking action on that advice in order for that person who's providing the insight to respect you and want to continue to help you in the future. And I think if you're on the other side of the coin and you're the person providing the advice, you need to see that person taking relentless action on the words that you're offering. And I can't tell you the number of times in which I have been on the side of providing individuals advice, and then months down the line, I see that person, I run into that person again, and that person hasn't taken action on the steps that we talked about. And immediately, right, that creates a red flag for me in wanting to help that person again, because I know that, to Andrew's point, I know that my time is being wasted. And again, even if I'm attending a networking event, I've set aside that, 2 hours or 3 hours of my week in which I'm trying to collaborate with people in a meaningful way. And when people aren't taking, the advice that is being provided seriously, or aren't trying to collaborate and work together, or, take the words that we're discussing and try to use those towards making strides, I think that it sort of reduces my susceptibility to, want to engage with that person again.
Yeah, I mean, you bring up a lot of really good points. And, as somebody who has somewhat a successful business in real estate, you're more on the side of mentor versus mentee, right? So let me ask you this from a mentor's perspective. Where do you find these mentors? Like, if you were a young, hustling real estate investor today, where would you, or where did you find mentors in the past?
Yeah, absolutely. And so, one of the things that I learned at a very young age is that opportunity is fostered in communities where resources exist, right? And I learned this because my father, growing up, would drive 45 minutes to an hour toward the city where there were more financial resources in order to make a living. And as I became older, I sort of took that to heart. And when I got my first job, I actually got a job working at a gym as a coach in one of the more affluent sub-districts of Boston. And so, for me, the gym that I was coaching at was a $200 a month membership, right? So anybody who's paying $200 a month for a gym membership, for those of you who know the gym Equinox, that's where I was working. So I ended up working with a whole bunch of really accomplished individuals. And, this ranged from the head of neuroscience at Harvard to a venture capitalist individual who ran his own private equity fund to a doctor who gave talks to the entire hospital on how to establish financial literacy amongst other medical professionals, right? And so, these are people with really accredited backgrounds that I was getting paid to coach. And so I think this proposed as a huge opportunity for me to seek advice and tutelage from these people on how they achieved their success, not necessarily through real estate, but just how they kind of achieved the milestones that got them to where they are. And then what you do is you kind of are able to study and identify commonalities amongst those people that are going to help you reach your personal goals.
Yeah, and Zach brings up some interesting points. And how do you identify a mentor in general? Like, say, for example, you have a rough childhood and you want to see how other successful people exemplify themselves. He's talking about meeting people at high-end gyms, at country clubs, at places where successful people are, right? But if you really want to niche down into a specific field, into a specific industry, at that point, you can really attend like real estate meetups or small business meetups, or meetups that would have somebody doing what you want to do at a larger scale. Like, for instance, where I met my first mentor, somebody who owns 1,000 units, a multifamily investor, he was where I wanted to be at 5 or 10 years from now, like, how did I find that mentor? I went to a virtual meetup that he was hosting, and at the end of the meetup, he asked, I'm looking to do this in Worcester, Massachusetts, which was where I lived at that time. I'm looking to do another meetup. Like, is anybody know any good venues in the area, right? So what did I do? I worked to provide him endless value in the form of finding him that venue. So I went to about 5 different venues. I looked him up. I got pricing. I got videos. I put in a nice, sexy Google Drive. I sent it to him, and he's like, this is great. I've literally been asking somebody to do this for 8 months. Hint, hint. Nobody's been doing this, right? I did it, and suddenly he made me his first guest speaker at that meetup. Eventually took me under his wing, right? So these are ways that I personally found a mentor, and Zack found other mentors in his workplace of working at, surrounding himself around places where successful people congregate.
Absolutely, and I think that this all comes back to the two things that this share, my story and Andrew's story share, is that we were both putting ourselves in a room full of people who were more successful than ourselves, right? And I think that anytime that you want to, level up, I think it's important that, you seek out opportunities to collaborate with people who are where you want to be, which is kind of what Andrew was sharing earlier. And I think that, kind of hitting on we've hit on kind of where you can find these people. We hit on how you can bring these people value. We hit on how you identify people who might be a good mentor. And I think this brings us to our last point, which is now, how do you flip the script to get this person to be serious about wanting to collaborate with you rather than to tutor you?
And we've kind of alluded to this throughout the entire we've alluded to this during the entire sort of program. And the more or less the main way you really do this is, you take the advice from the mentor, but you also follow up to show that you actually followed through with that advice and then you get their next piece of advice, right? Like, so if I go to a mentor, I ask for advice, I follow through, then I go to step 2, go to step 3, go to step 4, show some level of success, right? And then I run across a deal, I bring it to them. Obviously, they're going to want to partner with somebody who listens to them, who follows through, who listens to their guidance, right?
Yeah, absolutely. And I think it, Andrew hit on the possibility of bringing them a deal, right? I think that there could be, many ways in which you could get them to take you seriously. I think it could be actually bringing them a specific deal, but I also think it could be, how you market yourself in regards to opportunities that you're taking on. And so this kind of comes back to one of the reasons why I found value in networking with Andrew and seeking advice from Andrew, is that Andrew took it upon himself to take information that he had, insight that he had, and was marketing it externally through short video clips on social media, right? And there was not a lot at the time. There was not as many people in my immediate social network, because I was very limited in terms of the people that I knew in real estate that I could seek for advice. And so in general, I became friends with Andrew on social media, but then I was seeing a constant feed of content that was helpful to me and insightful to me and helping answer some of the questions that I had. I think that there's sort of 3 specific opportunities that stick out in my mind that, resulted in Andrew or myself being able to take an individual that we saw as being much more successful than us and harness the ability to work together with them and establish a partnership. And so, the example that I will use is I had a client that I was working with in the gym setting as a coach, and I had spent a lot of time talking about, financial literacy and investing and, stock market and, various, buying individual stocks versus funds versus, tax savings and a whole lot of various topics. And, we ended up getting into the fact that his family owned a lot of condos and that his entire family was into real estate investing. And then as time went along, he kind of conveyed the fact that he felt like real estate might be one of the better investment vehicles, but he didn't have a lot of local ties because he wasn't from the area and he had moved here as post-grad in order to get his first job in the medical industry. And so I took it upon myself to so I grew up in the area that we lived for my entire life. I knew Central Mass like the back of my hand. And so I was able to take my insight on various areas, understanding which towns were good, which school systems were good, what the rental amounts were in those demographics, and how I could share that insight with him. And I started to present him with opportunities. And we eventually settled on, working together and partnering on an opportunity together. And that was the first deal that I did with an external partner, was by bringing him an opportunity and with conviction and convincing him that the intangibles that I laid out indeed would result in this being a fruitful endeavor for him. And that resulted in establishing a relationship with an investor that has now invested over $1 million, with us in our company.
Yeah, exactly. So, I mean, that's exactly how I partnered with some of my other mentors. John Bambachi, I brought him a 69-unit portfolio in New Bedford, Massachusetts. He ended up raising around $800,000 for that deal and helps, stabilize it with us, acts as asset manager. Doug Mercurio, one of our closest confidants and attorneys, we ended up closing a 21-unit in Lowell, Massachusetts when we got this deal under contract. He believed in us. He was the money partner. We were the boots on the ground and the sweat equity, and we closed a deal down that way with one of our mentors. So ultimately, if you're in the game and good deals come across your desk and you really want to convert a mentor to partner, bringing them a good deal is the easiest way to do that, right? So I think that kind of wraps up, how to find a mentor in real estate. We really hope you enjoyed this content, and we'll see you next time on the Freedom Real Estate Podcast.
All right, now it's time for another segment of the deal analysis. Today, we have a duplex that is actually going to be a condo conversion play for us. Now, these have been actually becoming a little bit of a specialty with Andrew and Zach and myself, especially in this market where it's a little bit difficult to make quite the same returns just doing a straight rehab and flipping a property. But sectioning off a property into different condos and selling them off piecewise is still a pretty good strategy to go forward. Now, the duplex in question is on South Street in Somerville. And looking at this listing on Zillow, you can see that the estimate is actually pretty high. It's above $1 million, but that does not actually mean that is what it's worth or what the market will pay for it, nor does it mean that is what we're going to offer expecting to do rehab and condonizing this project. So let's go through the numbers together. Now, looking at recent sales comparables, we're seeing that condos in this part of Somerville are going for about $650 to $750, depending on the condition. And we're going to be aiming for the higher end of that segment. But just to be conservative, let's say our ARV is going to be $700,000. That means that we're expecting to sell both of these for $1.4 million. And from here, we're going to work backwards to what our offer is actually going to be. So let's look at the rehab together. Overall, as you can see, this property is actually in pretty good shape. The top unit is a little bit better than the bottom unit, but both need mainly just cosmetic upgrades. The roof has been replaced in the last couple of years, and the bones of this property are pretty solid. But we are seeing some knob and tube in the basement and some asbestos that will need to be removed before we can sell these off. So the asbestos removal is going to be about $20,000 to $30,000. Knob and tube will also be in a similar range, but we're expecting to get some money back from the city, so it really shouldn't cost us too much out of pocket. Flooring should be about $7,000 per unit. Cabinets will be about $10,000 per kitchen. About $5,000 per unit for paint. Bathrooms will be about $15,000 each. About $5,000 for landscaping. We want to make the front look nice, and we're going to be replacing the chain link fence with a nice white picket fence. Appliances will run us about $5,000 per unit, and condo docks will be another $10,000. That's to break up the property into two condos and drop the flooring and creating separate drawings for each. So the total rehab, we're aiming to be about $129,000, let's just call it $130,000. Now the loan is going to be another big factor of this deal. We're expecting this project to take about a year to complete, seeing as how it is Somerville and permits move a little bit slower. The loan itself will be about 10 to 11%, and we're likely paying 4 points on that loan. So with a year of holding costs, that equates to about $200,000 that we're going to be paying just while holding this property. And we do want to make a profit here, so we're aiming for about $200,000 just for our troubles, And of course, we're going to be splitting that between the team and anybody else that we bring on as a partner. And that brings us to the offer price. So let's work backwards. 1.4 million ARV minus 200,000 in holding costs, minus 200,000 that we're expecting to profit, and minus 167, but let's call it another 200 just for simplicity for the rehab. And that brings us to 800,000. And that is the most that we should be paying for this property in order to make all of our numbers work. And that is exactly the offer that we're going to be sending to the seller. Now, that is quite a bit lower than what the seller might want to be getting for this property, but that is exactly the kind of math that you want to be doing if you're looking to rehab or renovate a property. All right, guys, and that's been another look at a deal that we have come across. If you have a deal that you would like us to take a look at or to crunch some numbers together with you, definitely don't hesitate. Reach out and send it over, and we'll go through it together.